We have among us today really a group of leaders that represent the cross-section of investment in vehicles for cleaner technology, advanced technology, autonomous, and other technologies. We have two representatives from startups founded by pioneering entrepreneurs who saw the vision of clean vehicles and clean fleets well before anyone else thought that they were a possibility or profitable. And they took those concepts from idea to IPO, both of which went through one of these new innovative forms of public offering, the Special Purpose Acquisition Corp. And we'll talk a little bit about that today. We also have with us a leader who represents a generation of young investors who wants to lead the transition among the world's largest automakers to move them into the advanced, autonomous, clean technology future. And finally, we have a third person here who's really run all of the gamut across helming numerous startups, as well as now leading the clean technology, the e-mobility division of one of the world's largest heavy-duty vehicle manufacturers, a leader in the heavy-duty school bus market, as well as the tractor market, and several others. So what we're going to do is I'm going to ask each of these gentlemen to introduce themselves and answer the same question to start us off. And then we'll dive into the conversation. We have a few prepared questions for each of them that we think are going to be relevant to what's going on in the marketplace today. As we're doing this, remember, please submit your questions via the app, and I'll be integrating those throughout. Thomas, I'd love for you to start us off here today. Please introduce yourself, talk a little bit about how your company is involved in investing in the advanced vehicle market, and then give us your take on why you think we're seeing such strong deal flow, so much investment, literally tens if not hundreds of billions of dollars that really almost appeared overnight over the last couple of years in this advanced vehicle market. Take it away.
Terrific. Well, appreciate y'all having us here. My name is Thomas Healy, and I'm the founder and CEO of Hyliion. And we're a company focused on bringing Class 8 electrification to the market. And so we're doing it in a unique way. We're not going the conventional BEV plug into the grid path. We saw way too many hurdles there with just the amount of electricity that was going to be needed from the grid. And so we've taken a unique approach where we actually charge the battery pack through onboard generators. Specifically in the beginning, we're utilizing natural gas as the generator solution to charge that battery pack so that we don't have to be reliant on the grid in order to offer our solution. But to answer the question, of why is there so much capital being invested right now, I think, let's go back to the beginning here of, it was mentioned that there were 20-something SPACs that have been brought to the market for electrification or autonomous vehicles. How many of you in the audience could actually name every single one of those? So I think there's one back there, but that's it, right? Versus if we ask the other way and we say, how many of you have heard of a company called Tesla? It should be everyone in the audience, I would hope. And that's the reason why you're seeing so much investment going into this space, is because there's a tremendous opportunity here to transform this industry. And if you're able to do that, you're going to have an unbelievably successful organization. And that's why you're seeing so much interest going in towards investments towards the commercial vehicle space right now, because it's a prime opportunity to bring electrification forward, a great market, and the time is right. We're ready to move to electrification as an industry.
Thank you, Thomas. Dan Tram, over with Volvo Venture Capital. Same question to you. If you could please introduce yourself and then give us your take on why we're seeing such strong, just really a floodgates opening for investment in this market.
Absolutely, and thank you for having us here today. Well, first, a question to the audience. How many of you know of Volvo cars? All right, a good amount. And I'm sure all of those people also know that we, Volvo Group, is not Volvo Cars. A lot of people will confuse us for that. Once upon a time, we used to do cars. But today, Volvo Group is one of the world's largest truck manufacturers. So we do trucks, buses, and construction equipment. So an important note to make. Myself, Dan Tram, as Nate said, investment director at Volvo Group Venture Capital. I help Volvo Group with all of our North America venture capital investments. And so to the question, why has so much funding been poured into mobility nowadays? Well, in addition to what Thomas said, completely agree. Tesla made a lot of investors a lot of money, but mobility also got really cool. And what that means practically is that, well, not only did people make money off of Tesla, they saw that there's this company that can actually compete with OEMs, number one. And then you have the movement of AV, autonomous vehicles. So you actually could see that, well, these cars can drive themselves. And when you look at a truck operation, the biggest cost driver of moving a truck is labor. So in a world where you remove that, obviously that's very attractive. So among that, today you also have EV, and even though there hasn't been as much investments in EV as there has been in AV, regulation has certainly pushed that forward, and EV is already on its way and certainly happening. So those are three trends that's definitely making this space an interesting investment case. That's what I would say.
Thank you, Dan.
Yeah.
Gary, please introduce yourself, your storied career, and also, do you agree with the comments of the other two speakers in terms of why things are different today?
Okay, good afternoon. My name is Gary Horvath. I'm the Vice President of E-Mobility for Navistar. My career goes almost as long as Jack's, and General Motors, Fisker, Proterra for 4 years, and then I've been at Navistar for a couple of years heading up their e-mobility group. So I've seen the good, the bad, and the ugly of the EV space, and to really understand what makes the difference in different classes and different market segments. I guess I'll take a little bit different approach on this. I think the reason why there's more interest now is because batteries are a whole lot cheaper now than they used to be. 10 years ago, they were $1,200 a kilowatt hour. Now they're $100 to $150 a kilowatt hour. And so now what we run into now is that it gets to be cheaper to make an electric vehicle. And the thing that really makes it for credibility moving forward is that is the total cost of ownership turns the dial the other way to make that an electric vehicle is more cost effective than a diesel. Now there's the zero emissions benefits, it's the noise benefit that's part of it also, but it really comes down to that, you can actually have all the effects and it actually makes you money. In the transit bus industry, it's already there now, and that's why Proterra is jumping so much now, because it makes economic sense to run a zero emission transit bus. It's getting that way in my field in school buses, into medium duty trucks, and then into Class 8 trucks. We're not quite there yet, but we're getting closer all the time. There's some segments in some areas that it's cost effective now. So if you can get the benefits and it costs you the same amount of money, and in a lot of instances even cheaper than the alternative, I think that's really the reason why things have turned around here now. It's really the economics plus the benefits plus the applications to get out into the marketplace. Also, it kind of builds upon itself, is that the more entrance into the field, then there's more technology that's out there. It also gets more cost competitive for the components, and it's just a cycle that everything gets more cost effective. So I think it's more of the the time is right, but also the economic time is right too. And I think is one of the things. I certainly agree with my colleagues here, but I think a lot of it is dollars and cents too.
Thanks, Gary. All right, Ryan, you get to take us home on this question. If you could please introduce yourself, XL Fleet, and give us your take on the question and the comments of the other three panelists.
Certainly. Good afternoon, everyone. It is great to see your smiling faces. I am Ryan Check, Director of M&A at XL Fleet. I lead our corporate development efforts, including the sourcing and execution of M&A transactions and strategic investments. That includes our recent acquisition of World Energy Efficiency Services, which I can talk a little bit about later, and eNow, which is a solar electric powered reefer business. In terms of Why the amount of deal flow and the amount of capital being invested? I think I agree with all of the panelists here. One, certainly the heightened awareness of climate change and the increasing focus or impact of fossil fuels on our planet, with the increasing frequency and severity of natural disasters. And two, to Gary's point, advances in technology such that the cost of EV has come down to a point where it's starting to make sense on an economic basis, on a total cost of ownership basis relative to internal combustion engines. So we're at an inflection point. And third, Tesla has certainly paved the road, so to speak, in terms of creating the interest around EV and autonomous vehicles.
Thank you, Ryan. And I'm going to stick with you here, since you queued it up. This is a market where we've really only seen one new successful OEM enter the market in the last 30 years, and that was Tesla. Now, you are leading the M&A group at XL Fleet. You're a startup yourselves and have now gone public. Why then, if you can help us and the audience understand, are you expending scarce capital resources in these acquisitions in ancillary services like the charging and other capabilities that World Energy Efficiency offers?
Sure. So one of the biggest barriers to EV conversion is the charging infrastructure. We hear it from our fleet customers. How do I charge? Where do I charge? How much is it going to cost me? How much electricity do I need? Do I have sufficient power supply? Is my electricity bill going to spike? These are all questions that we endeavor to answer. And our XL Grid business is intended to be the easy button for EV conversion. And World Energy, our acquisition, which was completed back in October, is the first step in helping companies with EV charging, with EV management solutions, and the actual installation of EV chargers. What does that entail? It entails a full assessment of the electrical infrastructure at a site or a depot. It is the site layout of the charging stations and the actual installation of those charging stations. Additionally, it's an evaluation of energy efficiency measures. How can you optimize your current electrical usage? How can you use solar power or other on-site energy storage solutions to reduce the amount of electricity and the cost, all while at the same time taking full advantage of all available incentive dollars that are available. So for us, World Energy is the first step in making EV conversion simpler, cheaper, and quicker.
So it makes investment in sense in your strategy to build up and meet your customers' needs in that way, overcoming one of their biggest barriers.
Yes.
Great. And by the way, I am seeing a lot of excellent questions coming in. I will absolutely be referring to these in just a minute. I do want to give the panelists a few more questions of my own. Thomas, you were the company, Hyliion, here on the panel that was the first, at least on this panel, and really one of the earliest to go through the Special Purpose Acquisition Corp IPO. Why did you choose that? Why not wait for another round of capital? I mean, were you skipping the line, as it were, in venture capital raising?
Yeah, so I think from our end, we decided to go public because we saw it gave us an ability to raise enough capital to fully fund our business plan and be able to really go execute on the long-term journey of Hyliion. And so that was the initial kind of reason for why we went public. But I think the question around why go a SPAC path versus why go an IPO path that came up earlier, I think there's an element here of don't reinvent something if it's working, right? And we saw over the last 18 months here that companies were having success going to market through a SPAC. They were getting a significant amount of capital put behind them. And so, I think that's why you saw, as we mentioned earlier, 20-something companies that have gone down the SPAC path. Now, I think all of us are in different stages though, right? There are some who are going to be fully funded. There are some that are going to need to go out and raise additional capital. And, we'll be seeing that hit the market here in the years ahead. There'll be companies coming back to kind of replenish their balance sheet. As you step back and look at this as an investor in these different organizations, it's going to be important to really look at, well, what's the company, what's the business plan, and what's the team behind these organizations to actually go execute on it. And that's where you need to figure out, who has the best mousetrap, right? And what companies are going to be the most successful in the long term here, and make your decision of where to invest based on that. And I think that we saw a lot of interest going into commercial vehicle electrification this past year, and that's why these companies have been able to get funded. And the years ahead here will really determine who are going to be the winners long term. And the reality is not all these companies are going to win. There will be companies that either get bought out by others or ultimately need to go out and raise additional capital and aren't able to. And that's why I think a lot of this is going to come down to what's the approach that people are going to market and what customers do they have in place.
I want to continue on this because it has been such an important trend and invites both Ryan and Gary to jump in here. Do you see this continuing? Do you see the SPAC market being a major force as we can see continued growth and influx of capital?
I think there's pros and cons to the SPAC approach. From a pro perspective, it is a quicker and cheaper way to access the public equity markets relative to a traditional IPO. From a timing perspective, it is a 3 to 6 month process relative to a 12 to 18 month process for an IPO. From a cost perspective, there's less marketing costs, there's a much more limited roadshow, paying less fees to bankers. However, there are some cons as well. There is a large administrative burden to being a publicly traded company, particularly with SOX compliance. Things to consider are financial reporting, the financial close process, internal controls and processes, governance, IT infrastructure, cybersecurity. Taxes become more complex. So I caution those that are considering a SPAC route to make sure that the business is mature enough, there are sufficient resources in place, or at least a well thought out plan in place for an effective transition process.
Gary, anything you want to add?
Yeah, I think that, right now we're maybe a little bit oversaturated, because if nobody can name the 27 companies, they all start to look the same after a while. So I think part of it is to make sure that the business has some foundation, and that it's just and they have a business plan, and they actually have a better mousetrap as opposed to being just part of the pack. So I think really it comes down to making sure the business sense and the business idea is out there, and not just do something and then burn through all your money and then you're back at the same place all over again. So I think it may be appropriate to take a pause for a little bit if I was a company looking at it, and let the market kind of adjust and to understand what's going on, and then maybe a little bit later on. But I think if there's another EV SPAC in the next month or so, it's going to be okay. Here's another one. I think the momentum kind of runs out after a while. So I think you need a little bit of a change on that, a little bit of a pause, and if there's success comes from the ones that have gone here recently, then I think that it builds upon that momentum. But if you see other ones that aren't doing as well, then you might be categorized incorrectly as being a failure as versus a potential winner. So I think there's a little pause required right now, and then I think that it'll take off, in my opinion.
Yeah. And I think the public markets have already pulled back, right? I think we saw this probably 6 months ago, maybe 9 months ago, where companies that were trying to SPAC were having issues trying to even raise their PIPE. And when they would go try to talk to PIPE investors, the PIPE investors were actually retrading the deal with the SPAC sponsor. They were retrading the deal with the company that was going to be SPAC'd. And so I think we already saw that transition start to take place. And the demographic of companies that are going through SPACs now, I think, are very different than the ones that we even saw 12 months ago.
Thanks for adding that. And we'll revisit this. We'll know more in 6-8 months here when we come back for ACT Expo. Next year it'll be in May. So we can revisit, we can see what actually happened in those markets. I want to continue to invite you to submit questions. There's some great ones. I want to ask Dan a question, and then I'm immediately going to turn to your questions. Dan, I thought this would be, I've been thinking about this, and I think, in addition to the SPAC market, one of the things that has been most exciting over the last 18, 24 months is really the wholehearted, all-in investment among major OEMs in electrified technology especially. Right? And before that time, it was largely a startup game, and it was a Tesla game. It still hasn't brought a truck to market. And so I'm going to geek out here for a moment and borrow a line from Lord of the Rings when Gandalf says, a wizard arrives precisely when he's needed. Have the OEMs arrived precisely when they're needed?
Yeah. I would like to believe that Volvo arrives not too early nor too late, but just precisely when it is needed. Unfortunately, I do believe that EV deployment is now, and fortunately Volvo do have electric trucks on the road, so I can be proud to say that. But when I think about EV deployment and the timing of that, it's interesting because it's not as simple as making a few trucks, electric trucks or buses or construction equipment and deploying it and calling it a day. When we at Venture, when we think about it, we break it up in 3 components. The first one is the vehicle, and our organization obviously takes care of that. But the second one is charging infrastructure. Again, a lot of us have that on our mind already. But one that's often missed is the use case of the EV. Because even if you do put some chargers on whatever site and you have a truck or a bus that works, it might not be the case that it's fitting for the customer, right? Because today, as battery technology exists, it's not great for long haul use cases, right? So to start with, for example, when we work with our customers, we talk to the customers, see how their operations work and where EV is best deployed and how you think about that, right? So as things develop with time and as technology becomes more available and as battery technology improves and charging improves and software improves, we can start thinking about other use cases beyond just doing short distances and even including long haul, right? So it's not as simple as just put a charger on the ground, have a truck and have at it, because at the end of the day, EV is great for reducing greenhouse gas emissions, and that's what we want to do for sure. But we also want to make sure that our customers get equal or more value than they did with a diesel engine, for example.
Thanks, Dan. Whomever submitted the very first question, I'm now returning back to you. I think it's a great one. Maybe Ryan or Thomas will have the first opinion on this, but what are the key elements in your development funding initiatives that allow you to attract financing and venture capital?
Yeah, so I could take this one first, and then Ryan, if you want to add to it. So when we went out and spoke to the markets, our pitch was really about having a practical solution. Going back to what Dan just mentioned, my argument would be, if you want to go deploy an electric truck and you're going to use a coal-fired power plant to actually recharge that vehicle, you're not doing something positive for the environment, right? And so you got to look at what's going to be the most practical solution for the use case. And as all of you in the audience know, commercial vehicles, there's a lot of different types of commercial vehicles. It's not a one-size-fits-all. You have short-haul local delivery, you have final mile, you have over-the-road long-haul trucking, different sizes of vehicles. And there's going to be different electrification solutions that fit for those different market opportunities. It's kind of like the example of if you're a fleet that operates next to Niagara Falls and you can use the excess electricity coming off of Niagara Falls to produce clean hydrogen, then absolutely you should go hydrogen fuel cell. But if you don't have a source of clean hydrogen and renewable hydrogen near where your fleet is being operated, you don't want to use a dirty, pollutive process to make hydrogen. So from that standpoint, our pitch was we have a practical solution to make a huge change in the emissions profile of a vehicle while also doing it in a cost-effective way. Because that's the one thing that this audience knows better than anyone else. If this isn't going to save a fleet money, this will be an extremely difficult journey to try to get fleets to adopt your solution.
And from the XL Fleet perspective, I was not at XL Fleet when we went through our SPAC process. We went public via SPAC back in December. However, I can talk to it a little bit. And when investors were approaching us, right, there were really two key pieces to the investment thesis. One was that our focus is on hybrid and plug-in hybrid solutions, which serves as an interim solution to full EV, particularly for medium and heavy-duty applications. So there's going to be a period of time, years, perhaps decades, before we're full EV, and we offer the interim solution in plug-in hybrid, and in particular allow fleet customers to test drive, so to speak, operating a fully electric fleet. And I think, two, we are a business that has been around for quite some time, so there's a proven product. We were founded a little over 10 years ago. We have 4,500 systems installed and over 160 million customer miles driven. So there was we weren't just an idea. We had proven out our product and the ROI, and with customers, large fleet customers like Coca-Cola and FedEx and others.
Thanks. And really flipping this one around and turning to our investor on the panel, what do you look for in the development plans of startups, and what are those key things you're seeking as indicators? Yeah, this might be an investable proposition.
Yeah, I think EV investing, you also have to think about what type of investor you're talking to. So I'll talk from the venture perspective, which is typically you take a minority stake and you expect high growth with not too capital intensive of a business. So where does that fit into the EV world? Well, usually in software, right? So when we think about EV investments, we look at software solutions that can help accelerate or solve use cases for deploying EV fleets in commercial settings. So that's how we think about it.
Thanks, Dan. All right, we've talked a lot about EVs, and there's a question from the audience. Is it possible for BEVs to be applied in all heavy-duty mobility applications, including trucks, ships, rail, air transport, or will other solutions like fuel cell electric vehicles also play a role? And any of you are invited to take that. Gary.
Yeah, I think, I don't think there's one size fits all. I think that both have an application for both battery electric and fuel cell. If you're going long distance and carrying heavy load, you don't want to get to the point that you're carrying more batteries than you are freight after a while. So you really want to kind of to divide it up. We think that both of them have a place. I mean, our rule of thumb is about less than 250 miles is more battery electric. Over 250 miles is a fuel cell. I'm talking Class 8 truck, and that line will change as battery prices get smaller and densities go up. So that again, you don't want to have the point that if I'm having a megawatt of batteries there, and then I have to only haul 20,000 less pounds of weight in the truck, then it does then it kind of defeating the purpose of it. So we think that both of them have their place, and like I say. To what the gentleman said earlier for Volvo, we think very much up front is you do consulting with the customers and really understand what they're trying to do with the vehicle, what kind of duty cycle, what location, and then you really try to optimize that solution so you have the best fit. The last thing you want is to have the wrong application, or they buy a vehicle and it doesn't do what they want it to do. Gee, I need to go 200 miles and I only have battery for 150 miles. You're not a very happy customer when you do that. So I think it's really understanding, what your vehicle can do, understand what the customer is going to do with the vehicle, and then putting the proper combination in there so that you have the right solution for their need. I think that's kind of where it's at. But we see both of them. Again, infrastructure is a big play. So not only with charging, electrical grid, then hydrogen, and again, we think that you need a total enterprise solution. So what we look at is that, for electrical vehicle, we make sure we have the right application. We make sure that the charging infrastructure is there and it works with the vehicle, and then all the way through the process to deliver it. On the fuel cell, we think the same thing is, an enterprise solution for providing hydrogen and the vehicle, and then the ongoing maintenance and service after that. So we think for the acceptance, so many customers say, hey, I just want us to go zero emission from A to B. I don't care about the charging. I don't want to care about the charging. I don't want to care about the hydrogen. And we think that a total system solution is kind of the optimum way to make sure the acceptance is there and also the expertise is there, because any individual customer is not going to have that. So we work by ourselves and with our partners to make sure that we're able to provide that total enterprise solution to make sure that both of them are acceptable in the marketplace.
So Gary, you mentioned infrastructure, and I think we're in a point today where infrastructure will actually be the toughest problem going forward, and more so than the actual truck itself. Mm-hmm. We're seeing so much advancements go into battery packs. Like, we're going to get to a point where you can have a 1,000 kilowatt hour truck, and you're going to have some impact to payload, but it's going to be a lot less than where we are today. Like, no doubt batteries are heading in that direction, but the thing that's not changing very quickly is the grid, and how do you actually recharge these vehicles? There's a study done by, I believe it was Daimler, where they looked at the Tesla semi-truck and looked at, if you wanted to fast charge those vehicles. And they found that I think plugging in 2 trucks to the grid was going to consume more electricity than their entire truck manufacturing plant. So when you start looking at equations like that of that much consumption on the grid, that's what's going to be the long pole in the tent as to how do we move to electrification, and that's what's going to drive other solutions other than just BEV plug-in.
Did you have something to add, Ryan?
No, I think Tom answered it pretty well.
Thank you both. But turning it back to the customers then, are they going to have to become experts on all of these various technologies? I mean, it seems to be a big, tall ask for them to become so sophisticated on so many of these different technologies. Why can't we just have a couple of different solutions?
But I think that's a role that maybe all of us here on the panel will play, right? We will help the customer with that. I think before buying a diesel truck, you know what to do. You have your mechanics that can fix it. Not a problem. You know what tires to buy, what parts to buy, and whatnot, right? But as we move into a new world, I mean, an electric truck only has a fraction of the parts of a diesel truck to begin with. And as things progress, the truck is only going to get more and more advanced, and not to mention all the ADAS features that you're going to include as well. So it's possible that in the future, customers aren't buying trucks anymore as they did today, but it could be some type of as a service, truck as a service, or fleet as a service.
And I think it should be on us to educate the fleets or kind of bring the right solutions to the fleet. So the last thing you want to do as a supplier is bring the wrong product to a customer, right? It's going to end up in a bad situation for everyone. But the reality is I've seen a massive transition from 12 months ago to where we are now of the level of detail and interest that fleets are diving into. When you actually go sit down across the table from them and kind of talk about electrification, they're equipping themselves with the knowledge of really what's going to be the right solution. And I think we're at that point right now where fleets are diving into the level of detail where they can now choose what is going to be the best solution for them, which I think a couple of years ago, a year ago, we were in a position where it was kind of just talked about as electrification. Now we're talking about, well, how are we practically going to implement electrification into a fleet?
I think the other portion of it too is, in theory, the EV will last longer. Doesn't have to be overhauled as often. So historically, it'll be will be more robust in operation. And I think the other aspect is more and more that all these vehicles are all connected with telematics. So not only when there's something that does happen, it's more predictive maintenance. and understanding that up front a little bit there too. So, the home office will know what's going on when the vehicle's out on the road. And I think having that communications with the vehicles and also that other understanding too, I think will also help that whole training process, is that you'll be more knowledgeable, and at the same time, there'll be more smarts built into the vehicles that can be, you can call home and then you'll know what's going on when the vehicle shows up, what the issues are, and understand it. So I think that will help enable the adoption of the technology at the same time, more robust product, and the telematics to communicate, I think will help that situation.
Sticking with this diversity of cleaner technologies, we do have a question from the audience about the potential for RNG. Now, the latest data that we have, we do an annual project called the State of Sustainable Fleets, just to level set what's actually going on in the marketplace. And in 2020, the year ended with all of the vehicle fleets in California on road who were operating CNG were operating on 100% renewable natural gas. They'd already displaced fossil CNG in that market. And so the question is, how scalable is RNG really? Is it really just an interim solution, or is it one of these solutions that will be a better fit for some applications than EV or hydrogen?
So I feel like I should take this one because it's kind of our business model. RNG and CNG. So yeah, that's our pitch, right? We're using RNG in the vehicles to recharge the battery. And what we found is you can actually produce electricity locally on the truck using RNG for cheaper and greener than grid electricity in the US. So once you start getting to those sort of economics, then it's like, well, why would you use the grid to recharge a vehicle if you can do it locally on the truck for cheaper and greener? So RNG is a fantastic fuel. It's basically taking pollution and using pollution to charge a battery pack on a truck or drive the vehicle, as opposed to just letting that pollution emit out into the atmosphere. And the RNG market, renewable natural gas market, is skyrocketing. It's going exponential right now. There is just as many facilities, RNG capturing facilities, in production or being permitted right now as there already are in existence. So, we're going to see like double the amount of facilities coming on board into the RNG capturing space. And last year, one of the other interesting stats, California is obviously the leader in this of how much of their CNG is coming from RNG. But even nationwide, last year we saw that over half of the natural gas sold at stations was sourced from renewable natural gas. So we've already surpassed 50% of the fuel coming from RNG. And we see that number continuing to increase. And so if you can use pollution to charge a battery pack as opposed to using coal or other dirty sources of electric production, we think that's an amazing way to go.
Sticking with it, but turning to some of the other panelists, but do you think this is still a transition technology, or is it a permanent solution?
I personally think, to Thomas, but is that I think the end game is zero, and zero is zero, and if you use natural gas, there is some emissions. So I think when you go, it's got to be zero. And so then if it is, I personally think it's a intermediate. Now, again, it gets better than some of the alternatives, but I think the end game is zero, and that's what you have to strive for. So if it's battery electric or if it's fuel cell, you want a zero emission vehicle when it's all said and done. And I think anything that are steps to get there, but I think that's the final answer. Once you get to zero, then you stop. You don't have to go you don't have to go less than that. So I think that's kind of that's what the goal should be.
I'm going to transition to some of the other technologies that are receiving a lot of the attention, the investment, the capital, So in the medium and heavy duty vehicle market operated by fleets, including many who attend ACT Expo, we see investment in this market in the $274 billion range. And yet it's a big market, but a lot of that isn't the vehicles. A lot of that's going into the connected, to the charging, to the autonomous software. And yet you have these large capital intensive, long-lived assets that need to be invested in. Is there a mismatch, or are vehicles just too complicated and capital intensive? It just really has to be an OEM only kind of game.
I would argue the vehicle doesn't need to be reinvented, right? As we sit here and talk about electrification, that's the powertrain. That's not the vehicle, right? So if you're going to move to electric, you need to change your powertrain from being diesel to moving to electric. And that's why I think you're seeing a lot of investments going to kind of the auxiliary, solutions that are being attached to the vehicle, because at the end of the day, trucks are great, right? They're reliable. The OEMs have done a fantastic job of making really strong, really reliable, and very efficient vehicles. And the evolution that we're seeing is taking place is in the powertrain, not in the whole entire vehicle itself.
Yeah, I think, as the OEM here too, is that, building cars and trucks, is not as easy as people think, and it seems like if you have the electrical powertrain and the other portion of the powertrain itself with newer companies, they really do a good job on that. And a lot of times they fall down as the lessons learned and the tribal knowledge of building vehicles and durability and chassis and things that don't really change with the powertrain. So I think, a lot of it is it requires, a long-term knowledge to really kind of understand what makes the vehicle go. At the same time, it is not cheap. And so for a lot of the investments that are in there to do the fundamental of the vehicle itself, it does cost a lot of money. I think, the investment is going is where the holes are. And right now, like I said, the OEMs, the chassis doesn't change, the windows don't change, the tires don't change much. So that being the case, it's, there's companies that know how to do that now, but a lot of the new space and the autonomous and that kind of thing, there's other entrance into that field. So I think the money goes to where the needs are, and then the other portion on the vehicle itself, it is expensive and it does take a lot of knowledge to understand it. So I think that's kind of the combination between the two of why, the money goes to the unknowns right now.
Yes, all I will say here is that you have very large, well-capitalized incumbents with long histories and operating knowledge. We at Excel we have no grand ambitions of displacing Navistar or Daimler or others, although we want to partner with them, in fact, on the drivetrain. And to Gary's point, he's right. Manufacturing and production capacity requires significant upfront investment and is generally a more capital-intensive business and trades at lower valuations relative to software companies.
You heard it here first. You guys want a partner. Dan and Gary, as our representatives of the large, globally established OEMs who are making investments not only in tomorrow's technology, but certainly also in ensuring, as we heard here, that you're maintaining the best product, uptime, quality, et cetera, of today's technology. So can you kind of help walk us through how do you do that? How do you manage that relationship between the present and the future? How are you laying the foundation for the autonomous, connected, and electric technology that will very likely completely transform the vehicle and the vehicle customer relationship? What are some of the tools, the techniques, what things and risks are you tracking?
Go ahead, I'll let you go first.
Yeah. So I belong to the venture group, and we are one of the tools within Volvo Group that work on the next horizon. And there are other tools that other companies, including us, use. So you have partnerships, you have M&A, you have R&D, you have Innovation Lab, right? So all of those combined, hopefully, will put yourself in a position where you have developed products and services that serves the needs of your customer in the future, but also what society requires. So from our end, for example, what are the risks that we're worried about? It's really regulation. It would really be, we'd be in a tough position if we invested in a startup and then it happened to be a regulation comes out that does not serve that startup or product well. So that'd be tough. Other than that, we talk to startups across different stages, across all, anything trucking related, logistics as well, to really understand what's going on, right? And we marry what we learn externally with what we know internally as experts. And then we help our business units develop a strategy and work with them internally to figure out, well, where is the future going? Where should we spend our time and money, right? And I agree, as many have said on this panel, it's not a one-size-fits-all, right? We're a big organization and we can do many things at a time. And I think that's the importance to making sure that we have a good future with good development.
Gary.
Yeah. It's a challenge because you have your product that gets your profit and gets your sales, and then you say, yeah, but take that money away to do something new. And I think, I've worked in the startup side and I've worked on the traditional company. And on the startup side, you don't worry about the legacy stuff because you don't have it. You don't have Kodak with digital cameras and what do I do with the film processing? You don't worry about it. And the existing companies have the challenge because, a lot of our revenue is service parts for diesel engines. So how are you going to replace that if I go to electric? So, and that being the case, it's a challenge. What you basically have to do is do both, and part of it is, how do you do your life cycle, your current product, as opposed to finding the money to do the new stuff. And I think that's part of the hardest thing that we have, that we deal with, my colleagues there. We do that all the time, is how do we get the new stuff in that's a cost. It's not bringing profit in. It's taking money away and trying to leverage that. And so it really, it takes, a total company, rowing the same way to make sure that we're all knowing that, if we don't do that, we'll be obsolete. We don't want to be making black and white TVs. And then at the end of the day, it's like, gee, what happened to the business? So you have to make the conscious investment to do that. It's a lot of trying to use similar technologies. Like when we do a new platform, we make sure we design it so that, it could be, a diesel can use it and the EV goes down the same production line. So we're trying to future-proof the production so that, either of them can go, because as the market grows, I can stick either of them into production, and then the transition is pretty easy. You don't want to have it that, well, it's only diesel here, then that goes away, and it's only electric. You try to go through this transition period so that you can go through both, because as the curve switch, it's different. So I think it's smart manufacturing and smart implementation and planned obsolescence so that the product and the technology can come in so that you don't have all this huge investment that's going to be thrown away. And then how do you transition that? And then on the product development side, that's kind of what I do more on the product development side, is you make sure that you can share things so that the next generation can talk both electric and diesel and natural gas, so that that transition, when it does come, it won't be as painful, and it'll happen over time. Now we make sure, like I say, anything of our electric products run down the production line like anything else, and so that when the volume comes up, we can scale. And then, so that way, it's like, gee, it's going to really take off, and then I have to put a whole bunch of investment in. We're trying to do it up front so that it scales appropriately that the keep going on. So I think that's kind of the biggest challenge that you have to look at, is knowing it's, that's going to be the what it is, and then transition it over time and do it smart so that eventually when it does transfers over from the one to the other, that you're ready to adapt to it.
There's been a couple of questions that have come up related to infrastructure. One says, if you don't have a one-size-fits-all solution, we have to build out multiple infrastructure systems to support them all. And another one asks, and it really just begs the question from that first one, what is the role of the transportation industry in ensuring that infrastructure is ready? And specifically, if we're going to see the level of electrification that these investments are suggesting, what's the role of the industry to get the grid ready to support large-scale electrification?
I don't want to talk too much, but I will, since I've been doing this a long time. Part of it is standards. I mean, what you really want to, in North America, you try to, I think you have to have the charging standards so that, the CCS, level 1s and 2s, is that it works for cars and trucks. So I think part of it that the industry and transportation can do is so that, when you build the infrastructure out, it'll work for both cars and school buses and medium duty. I think standardization is part of it. So there's not, you don't want a Sony and a Betamax and a VHS, type of system that's out there. You want to have one size fits all. So I think that's something that the transportation can do. And at the same time is just kind of be smart is, don't have, all of them in one area, is try to, work strategically so that we can build the infrastructure across it and share it and make it so that, all people can share that, different OEMs can share it and different types of vehicles can. I think that's one way it can really, can help on that is to be sure that they're transparent and then also that they, that they work in the different industries and you try to future-proof it too so that, you're not buying something that's going to be obsolete. I think that's kind of the way the transportation industry can help.
Yeah, what I can answer on the last question is, what role do we play in bringing infrastructure to the industry is that in Europe, for example, Volvo Group, Traton Group, and Daimler committed together in a JV to install chargers across Europe. So we're taking that step because we see that it's a necessary step to reach the emission goals that we have in Europe. And as incumbents in the industry over there, we together can achieve that. So as industry players, we come together and did that over there in Europe at least.
Mm-hmm. But I also want to make sure we hit this question around preparing grid for demand, or and I don't know if on the hydrogen side we might see that same kind of thing, but certainly in California, where some of the earliest fleet electrification projects are already being deployed, well, we are experiencing intermittent blackouts, and some of them are planned, some of them are not. It's already we're placing strains on the grid. Is there a role for the transportation industry to work more closely to smooth through those, to prepare the grid for this demand?
Yeah, so, I don't know how much you can really prepare the grid, because the problem is that when you put extra load on the grid, the reality is you start kicking on other power generation plants, and those are usually the dirtiest of power generation plants out there, right? If you have 15% or 20% of our fuel comes from renewables, wind, solar, hydro, those always get used, right? We're never going to sit here and not consume that electricity versus, a coal-fired power plant that can be turned on and off. And so when you start putting a lot of peak demand on the grid, that's when you're going to start sourcing very dirty grid electricity. So from that standpoint, if you can, source the electricity in kind of off-peak times, then sure, you're doing, a great job, and it's going to be cleaner than not electricity. But that kind of, I don't want to make this a pitch on Hyliion, but that goes back to why we see it as you can't just be sitting here reliant on the grid, because it can't support it right now. And even not only is there not enough clean production of electricity, but then you run into what's the actual cost of setting up infrastructure. And we've seen some crazy numbers, and Gary, you know this better than I do, but in talking with a fleet that operates 150 trucks in one terminal, they got quoted like $30 million to put in charging infrastructure. And then at that point, the fleet was just like, well, no, that doesn't work, right? We can't spend that much money on grid infrastructure. And so that's where it kind of goes back to, I think, the theme of what we've, as panelists have been saying, is there's going to be different solutions for different markets that work well. And I don't think we're going to have a one-size-fits-all solution for this industry. Similar to like passenger car and trucks today don't have a one-size-fits-all, right? We have gasoline-powered vehicle, we have diesel-powered vehicles. You're going to see a mix of solutions for the years ahead here for alternative vehicles, or alternative fuel vehicles.
Yeah, I think the other thing is smart charging. Don't charge them all at the same time. Spread them around, do it differently. The other aspect too is the electric vehicles for battery storage. For vehicle to grid. We do school buses, and in the summertime they're sitting around not doing a lot. During the day is to with solar and is available, charge up my school bus battery when it's sitting there, and then use it at 6 o'clock when the peak is other ways of people that are looking at it to try to compensate for that peak demand on it. So I think it's just if everybody all plugs in the same time, the same hour, yeah, it's a problem. But if you do a little bit smarter on that, I think there's some ways that you can handle the loads a little bit better.
Thank you for that. Ryan, I know you've invested in acquiring a charging-related company. Do you have anything else to add?
Yeah, that's exactly the rationale behind our acquisition of World Energy, right? Is to employ one energy efficiency solution so you can optimize your current electricity usage, so to speak. You can supplement the electrical power with solar power. You can use on-site energy storage with batteries and other solutions. And there's a strategy around that in terms of what type of chargers do you need, level 1, 2, 3, when do you charge your vehicles, right? Depending on the fleet and the duty cycle of those vehicles. So on a grand scale, it's hard to quantify or understand how transportation industry as a whole can help, but we try to do it on an individual basis, working with that particular fleet customer, ensuring that you're in communication and being strategic with the local utility company in order to take advantage of incentives and make sure that they're aware of perhaps some increased electricity requirements for EV fleets.
Turning to a different tact here, different technology. We have a question from the audience. What are your thoughts on autonomous solutions, given that fleets have a massive shortage on available drivers? This may actually be a fleet in the room experiencing that problem. That's a very real business challenge. Do you believe that fleets will be one of the first adopters of this technology? Why or why not?
I think autonomous within fleets, though we've made announcements and investment in autonomous companies. I think it's going to be walk before you run, and I think it'll be, it's not going to be on any street in every way. I think it'll start with limited routes to start with it. But then I do see it having a place, but I don't think it's going to be, the Jetsons that they drive by themselves and they do everything different. I do think that it does have a place, and it'll start with, like I say, this route will do this at this distance back and forth. I think that will be where the start is, and then you get those economies of scale. But then, there's a lot of things that come into play, with weather and other stuff that's going on there that I don't think it's going to be this magical. It's going to be by itself in a couple of years, as certain people say. I think it will have its place, and then over time, as it gets better, it'll be there. But like I say, I do see it there. We have interest from all of our customers on this, and we just have to apply where the again, the right situation, and it's not a one size fits all, and it's not going to just happen overnight. So I think that's kind of where we see it.
Yeah, it's very similar to electrification, right? There are areas where it works great, and it's going to happen there, and those vehicles will move to autonomous. And then there are other areas where it's going to take a long time. It's like your school bus example, right? It's like, yeah, it's a prime opportunity right now to go to BEV plug-in. Same thing with like a line haul truck that operates on the same route every day, driving on the highway. It's awesome for autonomous, and that's where that industry will start.
Right. There's, interestingly enough, you guys have started some conversations in the audience here. I'm reading some questions related to renewable energy in the grid. I am, however, going to take moderator prerogative and hand those over to my other moderator for the infrastructure session and encourage him to consider those questions. I do want to ask, we brought up briefly, but just moved on to some other topics, regulation, the role and critical challenges or opportunities around regulation vis-a-vis risk and either reducing risk or frankly increasing risk. So I'd love to hear from each of you, what single policy has provided the greatest certainty to underpin your investments? And on the opposite side, are there policies or types of policies that really introduce a tremendous amount of risk for your cleaner investments?
I can kick this one off and just, our thought process, or I guess my thought process on, government funding and subsidies is like a great way to get started. But if we make our buying decisions reliant on government subsidies, that's not going to win out in the long term, right? I think it's a great way to kind of get initial funding there, to get initial vehicles out on the road, and even as we saw in Pascar, get hundreds of thousands of vehicles out on the road with the federal tax incentive that I think it was like $7,500 for EVs. So that's the way we need to be thinking about this, is like utilize it as a tool right now to accelerate adoption, but don't make buying decisions reliant on needing government subsidies in the long term, because they won't be there forever. And so, I think there's a lot of great initiatives going on, like zero emission vehicle emit credits and targets, and then there's state by state funding opportunities to get electric vehicles adopted. And companies like Hyliion and everyone else on this panel will utilize those to get started. But at the end of the day, we need to be bringing forward cheaper than diesel solutions for the long term here.
And what I would say, regulation that helps de-risk when we think about investments are those that put goals for electric fleets, either by city or state or sometimes country, saying we're going to reach zero emissions by this year, or have all electric fleet by this year. That just jumpstarts the industry, the commercial industry, to adopt EV fleets, which is very helpful. I think people get there otherwise anyways, but that just pushes companies to do that, and I think that's great. So I think that's from my perspective one of the more helpful regulations that drive EV adoption.
So I'm curious, for the two of you, are you seeing, or I guess three, all of you, are you seeing more aggressive targets being set by government right now, or by the actual fleets that you're selling to, who have set zero emission targets by 2035, 2040?
I think, there's two things. The ACT, the Advanced Clean Truck Regulation, not to be confused.
No association with
not
Advanced
to be
Clean
confused with
Transportation
this,
Expo.
yes. There's a percentage of vehicles that have to be zero emissions starting in 2024, in each class of 5% all the way up to, 60, 70%. So that's driving a lot. It's a ARB rule for California Air Resources Board, but then you have other states that are jumping on board with that, and it could be, 30 to 40, 50% of the country will have that. So that's like, no kidding, you have to have zero emissions or you won't be able to sell. So that's one aspect of it for regulation that forces the industry. The other aspect is emission standards for diesels that in 2024 and then again in 2027 makes it even harder to sell a diesel vehicle. So between forcing it for electric and make it really hard to sell a diesel, then if you look at it both ways, then it kind of gets you more that after a while the cost effective, it gets better for zero emissions because it's going to cost you so much to get the diesels there. And then at the same time is you just have to make so many of them to be that to even sell in the state. And I think those kind of regulations really kind of drive the OEMs and the industry to take it serious and understand it. The sustainability interests from the companies are there, but some are hard standards, some are a little softer if they can't get there. But when you have a regulation, you do have to meet it. So I think the government regulations in both so much in fleets and then emission standards I think are the ones that really drive the industry so far. That's in this decade is what's happening.
Yes, I think regulations are certainly forcing or accelerating adoption to EV. When we invested in eNow, the solar electric trailer business, when we did our diligence and we spoke with customers, one of the biggest motivations for them considering electric trailers was to comply with upcoming regulations. So policy is certainly a catalyst for conversion, but it has to make sense on an economic basis as well.
I'm going to combine two questions here. When we were preparing for this, it was you guys who brought up some innovations and potential to move towards fleet as a service, new leasing models, especially given some of the high upfront costs of either the vehicles or the infrastructure or just transitioning. So do you see those becoming more and more the norm? Say fleet as a service, charging as a service, et cetera. We've got a panel on that, I think, on Wednesday. But then more broadly, what are your predictions for the next 5 to 7 years in the innovations and investment in this market that you're expected to see? I'm going to start in the middle there with Gary.
I think that I guess the funding portion, the problem now is sticker shock. I said, hey, I got this great electric truck that costs 2.5 times of what you paid today. What do you think about it? So it's that sticker shock of this higher cost than we have. So incentives certainly help. It's there, but that's kind of people are all in until you tell them the price, and then once you get past that, and they say, okay, different. But so then I think as the costs come down and where we're at now, I think a school bus by the mile or a truck by a mile, I think is a good transition to get it, because you don't have the cost price on it. And in addition to that is the technology keeps changing. You don't want to be stuck with the wrong stuff, because truck owners keep their vehicles for a long time, and they don't want to buy the wrong product, the wrong technology. So I think, as opposed to, you can do it different ways. You can have it that there's an incentive for the purchase price, or maybe, you do it as so much per mile to try to get it. I think that's one aspect of it. For innovation in the next 5 years, anything that can reduce energy is helpful. So it's, we concentrate a lot with electric drivetrain and a better battery, but there's other stuff on it too. There's air conditioning, there's other aspect of it. So anything that you can do to reduce the electric load on an electric vehicle helps. So I think that's the other aspect of it.
Yeah, I think fleet as a service or vehicle as a service, electrification as a service is an interesting business model. It helps solve two of the biggest barriers to EV adoption, which is the higher upfront costs, as well as just the complexity around charging stations and how do you charge, when do you charge. I think as we're on the cusp of a massive transition from internal combustion engines to electric-powered vehicles, I think that the as-a-service business model could have staying power. This disruption could be a catalyst for as-a-service business model. And when you think, if you're a fleet manager, at what cost you operate your fleet on a dollar per mile basis or a monthly basis. If there's a third-party provider that can take that off your hands and do it at a lower cost, I think there'll certainly be a market for it. Part of our broader vision at XL Fleet is to offer electrification as a service, a turnkey solution that includes the vehicle, the charging, and the power, all at a fixed cost.
Dan.
Yeah, so what I would say on the first question, on how fleets will adopt EV, or we think as a service, I think early on in the coming years, as infrastructure is being installed and more EV fleets are coming on the road, I do think we'll see more of an as-a-service model, and that's simply because technology changes a lot. You don't want to be stuck something that's going to become obsolete or not relevant for a few years. But if I look into the future, I do believe that over time, as companies develop competence in operating these vehicles and fixing them and knowing how they work, they're going to want to take on the asset themselves. So early on is not owning the asset, but over time, they're going to want to own the asset again as they do today. So that's far in the future. In terms of innovation, I think both near-term and long-term, anything that is about optimization is going to be very important. That is true for how trucks and logistics services work today with diesel engines, but it's also true for EV, right? It is even more important because if you have optimized routes and trucks and operations, well, hopefully you're maximizing your range. So when we think about innovation, I think that's an important one.
Thomas, you get the last word.
Yeah, no, I actually couldn't agree more with Dan, what he just said of fleets are going to approach this in a way where they want to de-risk moving to electrification as much as possible, right? And if the risk is, a VP of fleet maintenance needs to come in and buy a $400,000 electric vehicle, $300,000, whatever the price is, right? Their job is on the line if that doesn't go well. And that's a huge, huge risk, right? And so in the beginning, if they can de-risk it by leasing that asset or vehicle as a service kind of a model, they're going to go down that path. And then it'll go into, for the years in the beginning, they're going to experience how does it work and what are the pitfalls and what's good, what's bad, and then they'll get it optimized. And then at that point, they're going to say, all right, well now I'll own that asset. And if you're a large fleet that operates thousands of vehicles, then you're going to have your cost advantage over others who operate smaller fleets. So, I couldn't agree more with Dan's approach here. It's going to be different in the beginning years than what it's going to be in the long term.
Well, gentlemen, thank you for helping us to kick off this Investor Summit with the first panel, bringing our first Investor Summit live version of it, first panel ever to be live for the Advanced Transportation Investor Summit.